Hello everyone and welcome back to episode 8 of the technical analysis course, and in this episode we are going to be learning the head and shoulders pattern, the inverse head and shoulders, and the Bart formation. Now starting off with the head and shoulders pattern first, this really is the most simple of the formations that we're going to be talking about in this episode, and this is a bearish formation and continuation pattern. Now the way that this works is that it holds a relative level of support, and following this relative level of support, it goes up to a new high. Now after this new high, it retraces back down to support and then forms a higher high, then comes back to support once again, then has a lower high and then comes back to support once again. Now something that's important to notice over here is that your left shoulder and your right shoulder should be about the same height, and that your head should always be higher than your shoulders. Another important thing is that you do have a relative level of support. Making sure that you hold a relative level of support is definitely very important when it comes to this, because sometimes I see people that have these crazy head and shoulders where they have their right shoulder over here and their left shoulder over here, and it's all slanted and jagged, and to me that just doesn't count as a satisfactory formation. And the less clean that it looks, the less reliable the formation is, and that's usually my general rule of thumb. And so with head and shoulders, you will see a lot of people making these very sloppy, and that is something to be hesitant of. Unless it's clean, I really don't like to count it as a head and shoulders, but when these are clean formations like this, it is very reliable for the most part, and as you can see, a very nasty breakdown. So at the start of this head and shoulders, your left shoulder peaking at around $9,612, your head peaking at around $10,100, and then your right shoulder peaking around $9,500. So with all of these being in the relative same area over here, what this shows is that the breakdown all the way down to $7,672 is very significant. Now, a lot of people will tell you that you need to short the head of a head and shoulders, or that you need to short the immediate top of the right shoulder, and I kind of disagree with that, because it's very hard to short the head of a head and shoulders if you don't know if there's going to be a right shoulder. So shorting up here would be a little bit preemptive because of the fact that you don't know that this right shoulder is there yet, and you essentially have to wait for it to form before you can get into it. So usually what I like to do is make sure that I know that this is actually a right shoulder forming, and then get into a short. Now, this is not something that I use all the time. I would say head and shoulders are probably one of my least used technical analysis formations, just because of the fact that they can be very sloppy. They are very all over the place. And so with that being said, I do like to use other things, and I don't see them form too cleanly like we have over here. Now, I do have a couple of other examples, but I do not see head and shoulders forming this clean on Bitcoin a lot. It does happen on a lot of other things, and yes, it is used a lot, but me personally, unless it's a very clean head and shoulders, I do not like to enter into it here. So deleting this so I can show you guys exactly how this works is that you can see that this area around $8,725 is this relative support area. You do see a new high form, a retrace back to this area, a higher high form, a retrace back to this area, and then a lower high form following this, and then of course the drop off following. So that's how I get this drawing from over here. Moving on to our next example, I have another head and shoulders up here. So with this one, again, holding the relative same level of support over around here, around $14,650. What we see is a peak up to around $15,553. A new head over here peaking all the way up to around $17,500, and then the right shoulder forming right to where the left shoulder was, and then this thing dumped pretty harshly. The initial dump went all the way down to around $13,300. It came back up and then continued the dump, and this was really the story of this entire cryptocurrency market over here, setting up multiple head and shoulders all the way down over here, saying that this was still a bear market. Now, the opposite of a head and shoulders pattern is the inverse head and shoulders. And since the head and shoulders is a bearish formation pattern, the inverse head and shoulders is a bullish formation and continuation pattern. Now, we can see in this example here, this one plays out very well, and this one is a little bit more of a jaggedy one because of the fact that you do have two lows over here so close to one another, really counting as a double bottom like we've talked about before. But I think the important lesson is the fact that you do have this relative layer of support, or rather resistance up here, and then wicking down and showing these very clean shoulders. So with these wicks down over here being around $6,080 on both of them respectively, and then having this new low over here count as your head, what this did is set up a great inverse head and shoulders formation because of the fact that you were just showing essentially just more bullish momentum coming into this and saying that you were able to form higher lows and that this was just rejecting any kind of bearish pressure and any kind of bearish presence that was in this area. And then following this, you did see a substantial run up from the right shoulder, hitting the base around $6,700 all the way to topping off at around $8,471. Now this is a little bit more on a macro scale, and again, it's not very usual to see things that are this clean, and even with this one being a little bit jaggedy over here, you can see that the head is a little bit mismade, but you can still count it because the fact that if you just put this right in between the two heads over here, or in between the two lows, excuse me, you can see that it does form a very, very nice head, and you can see the shoulders more clearly than anything else. And that's really what got my attention for this being a inverse head and shoulders pattern. You can almost even call this an ascending triangle of sorts, but that's a story and a topic for another video. Moving over here, I want to go ahead and start talking about the Barts now that we've covered most of the head and shoulders. We do have one last head and shoulders pattern over here, this one being just a regular head and shoulders. Of course, seeing your relative level of support over here at around $3,315, wicking up, forming a, really coming back to support, forming a higher high, coming back to support, forming a lower high, back to support, and then this thing dropping again. Head and shoulders, this is a very textbook and classic version of a clean head and shoulders. This one is about as clean as it gets, as you guys can see it just staying almost perfectly within the triangles. Now, this is a tool on TradingView, which you can come down over here. You open this tab up, and it's labeled right here, head and shoulders. They're pretty simple to draw. All you have to do is set your first base, set your left shoulder, come back down to the base, form your head, come back down to the base, form your right shoulder, and then come down to the base once again. Now sometimes this won't fill in, you just kind of have to adjust the bases of your triangles, and it should look something like this at the end of the day. Moving on to Bart formations. Bart formations are not a formation that is used either as a bullish or a bearish case scenario. It's not something that you know is going to happen one way or another, and in fact, this was really deemed and coined in cryptocurrency because Bitcoin was making use of it so much, and a lot of the other cryptocurrencies were as well. And so with this not being really I would say a real, so to say, technical analysis term, this is something that you're probably going to hear a lot, and I do want to make sure that you guys are educated on it, so when people bring up the term, oh, this might Bart, or oh, this is a Bart, or that was a Bart, that you guys know what a Bart is and how they act. So a Bart gets its name simply from the Bart character from The Simpsons show. And what you see over here is that you get a parabolic movement in one direction followed by, and let's go ahead and grab a good example so we can show this. So what you can see over here is a parabolic move up followed by a jaggedy head on top and then a Bart right back down. And so what this is saying is that it's a one-way strong move, one candle up usually, just flat jaggedy consolidation on top, and then one way right back down. And so what this looks like is essentially kind of the Bart head. You can kind of like draw a little face, you can see his jaggedy head on top, and that's where it gets its name from. And so what we saw is we really saw this a lot towards the end of December and the beginning of 2019 when this was happening all over the place. And all you were seeing is just these one-way volatile moves down, followed by jaggedy consolidation, and then seeing volatile moves right back up. I mean, you can see it all over the place, and I do have a lot of these highlighted again right over here. Just one-way move down, jaggedy consolidation, and then move right back up. Over here, the same deal. You have a one-way move up, jaggedy consolidation, one-way move back down, hitting the baseline of this Bart, and then having just more repeat itself over and over again over here. So with this not really being a said head and shoulders or a said technical analysis term, it is something to know because with this happening so much in cryptocurrency recently, it's something that everyone needs to be aware of. And if you do see kind of jagged consolidation, it is one thing that you would definitely want to watch out for. And even if I don't like to trade Barts, because again, I personally don't like to trade Barts, I don't think that they are a real technical analysis formation. Yes, they do happen, and yes, we do have a name for it, but it's not to say that you see jagged consolidation and you immediately counter trade the trend. And that's one of my biggest problems with Barts itself. But looking at this, I do want to make sure that you guys are aware of what they are, how they're called, and when they do happen, and if you hear the words and people calling them apart, you guys know what it is. Again, it is not something that I like to trade off of. If I see jagged consolidation, I immediately don't want to counter trade the trend. Yes, it was happening a lot in this time period, but it's not something that I'm saying happens all the time, and certainly not something I want to trade off of, especially if you have indicators and other reasons to believe that it's going to go one way. The Bart should not be a sole reason why you're taking a position. So explaining this just a little bit further over here, we can go back to this example over here. And show that the way that the Barts work is that they are very volatile, and the way to deal with these is that you really just want to make sure you have stop losses and stop profits in set. And so when this comes down, say you actually made a nice short and then you start seeing jaggedy consolidation, well, something I might do is actually just set a stop profit so that if this does Bart back up, I'm able to actually get stopped out in profit over here. And really the same thing over here. So say I went to long somewhere around this area, and then this guy moves up and I start seeing jaggedy consolidation, and then I say, all right, enough's enough. I want to set like my profit over here, so if this forms a lower low in this area, I'm going to get stopped out in profit. And so when this thing tanks, I'm getting stopped out here instead of having to ride this all the way to the new bottom over here in this area. And that's really the way I like to play Barts, is more of a safer precaution, making sure that I end my trades in profits rather than having them Bart the opposite way and get into a potential loss situation. So to recap this today, what we have is the head and shoulders, the inverse head and shoulders, and the Bart. The Bart is really just a name to identify when something happens. I do not trade off of Barts. I think it's very risky. I don't think that they are a real formation, but we do have a name for them when they do occur. With Barts, I like to keep my stops tight. I like to keep my profits over here, and that's one of the biggest takeaways. For head and shoulders, they must be clean. That's one of the things I can't stress enough. So many people create the craziest head and shoulders that you'll ever see. Inverse head and shoulders are all right, but slanted head and shoulders are something I see all the time. People creating these cockamamie, crazy head and shoulders like this, and saying that this is just a slanted inverse head and shoulders. If it is not a clean, clear formation, I do not like it. Again, the less clean and clear that it is, the less reliable I believe the formation to be. The more you contort the thing, the less I like it. So with these, I like these to be clean. Your head should always be higher than your shoulders, and your shoulders should always be relatively around the same area, and your support should be a relative level as well. With the inverse head and shoulders, you have to remember that that is a bullish formation and continuation pattern, while the regular head and shoulders is a bearish one. It works the exact same way that the head and shoulders does, literally just flipped upside down, and all those same rules do apply. So that's going to be the end of episode 8. I hope you guys did enjoy. We have a couple of things left that are going to be very, very useful as we get into moving averages and some of the indicators and oscillators. So we have a lot of cool stuff in store, and I will see you guys in the next episode.